Welcome to another episode of Buying Queensland, brought to you by Edwards & Mills Buyers Agents. I'm joined today by a good mate of mine, Barry. Thanks for joining us, mate.
Thanks, Jake.
Now,
Thanks very much
Baz,
for having me.
before I go into a bit more detail, man, about you and your business, today's topic's going to be talking about interest rates, and you're the man when it comes to mortgages and helping people borrow money to buy houses. But tell us a little bit about SW Brokerage, mate, and where it started and how it started for you.
SW Brokerage started only a couple of years ago, 2 years ago. It was formed out of the change of the industry, where it's taking more of a holistic kind of approach for people's finances as opposed to just the mortgage, if that makes sense.
Yep.
I've been a broker for 19 years, had a failed football career in the UK.
Soccer.
Soccer, the world game. And came back, mate, and then obviously started it. It was a one-man band for a long time, and now collectively there's about 12 of us. Had a failed mortgage franchise, so learned a lot, failed a lot, which is good. And that's probably the birth of SW Brokerage, where it's taken a holistic approach. Yep. We're kind of the conduit between us and the bank, but also, your financial planners, your accountants, stockbrokers. And it's a really experienced team that I have got, which is good. So it's about identifying opportunities at the same time for clients, and guiding them through the right financial landscape, I suppose, if that makes sense. So, mate, that's who we are. We're based here in Brisbane. We've got an office down the coast. And it's a boutique firm, mate, and I love it.
Yeah. Who are your clientele?
It's a good question, mate. So it ranges. You would have, the first home buyers, you'd have people buying and selling again, and then you'd have investors. So the majority of our client base would be your mum and dads looking to either upgrade, looking to refinance. So look, in saying that, there's a few brokers that we've got in-house that deal a lot with first home buyers, and we've got a first home buyer seminar happening this week down the coast. So our demographic, mate, would be anyone that's looking to either get onto the property market, but also at the same time looking for guidance along the way to possibly looking at other opportunities. Yeah.
So to give everyone, an example of how and why brokers and buyers agents working well together is that at Edwards and Mills, we get a prospect, someone will give us a call, they want to buy a property. One of the first questions that we ask is, look, where are you at financially? Have you had pre-approval? Have you spoken to a broker? 80% of the time, a lot of people haven't actually done that step yet. Yep. So that's where people like Barry, you come in, and then we'll flick clients your way. Mate, can you get them sorted for us? Yep, you go away, do your work, let us know what they can borrow, and then it allows us to go and do our job and purchase property.
Yeah, look, I don't think buyers agents are going to become more predominant. Everyone's probably seen, the New York and LA.
The New York listings.
The Ryans of the world. But I think in all honesty, where it's beneficial for clients is that when they're dealing with a real estate agent, and it's just not knocking real estate agents, it's the industry. Yep. They've got so many people that come through the door, and by having a buyer's agent, it just allows that client that hand around their shoulder to go, let me help you, let me guide you, and it kind of pushes aside all the game.
Yeah, it does. And just touching on that again, I think it's worthy to mention that the role, I think it makes our job as buyers agents a lot easier when we're working with great brokers, because we can get that direct answer, what they can borrow, how does that look for them. It helps me as an agent working with my client actually take them through that journey in purchasing and help them better understand what steps they need to be met before buying a property. But then you've got those clients who come to us who have bought 2, 3 properties, and they know how it works. They come to us, they know what they've got, and we can move forward. Hey, mate, it's currently as we sit here right now, this podcast is probably going to go live after the fact, but it's election week.
Yep.
It's been a big kind of campaign leading up to it. A couple of things that have been a big drivers of the campaign have been around interest rates.
Yep.
We had a quick chat about this last week on another podcast around what's your experience, mate, historically working as a broker in the field you're in around interest rates and perhaps media, how that folds down to people wanting to buy, the impact you've seen on your industry.
Look, it tends to the inquiry levels reduces a little bit coming into an election.
Because of the fear?
The fear.
Yeah.
But then you get savvy people that obviously capitalise on that fear. You know, Warren Buffett says a good quote, be fearful when everyone is greedy, but be greedy when everyone is fearful. And, you know, like if you'd done that prior, just talking about property in general, I'll get to interest rates, but if you'd done that prior to this election that we're coming to, if you remember, Labor was supposed to be getting in, and you know they were paid out accordingly.
Yeah.
And they were talking about getting rid of negative gearing, so that would put a lot of people off. You know, like people are not going to do it. But then you know, like you'd have your investors that would be purchasing because obviously there's a demand. The people aren't looking at buying. There's a lesser demand for people to be buying property because there was reluctance. Fast forward to where we are now. We've just been through coronavirus. Brisbane has had, some areas have had up to 30% growth in the last 12 months.
Yeah, massive.
So they're the ones who really benefit now, right?
Yep.
So, so talking about interest rates, it's interesting. We needed to have the rise that we had. Unemployment's still a really good level. I have this conversation on a daily basis now with people. Big thing I'd probably encourage your followers to do, if this is the case, if they are fearful with where interest rates are going, bring it back to the basics in terms of looking at your budget, what your net income is per month, and what your living expenses are per month. Really itemise it, because without a good foundation of your budget, then you're really pretty much in the wilderness of fear, because you're attracted to, there's so much media, there's so much news out there. There's information overload.
Yep.
Not knowing that, people are talking about right now, should I fix? Well, it's everyone's horses for courses, mate, So with the fixed, if you haven't really fixed by now, you've kind of missed the boat because the interest rates were a lot cheaper a couple of months ago. Yep. But look, everyone's got a different stage. Yeah, different stage of their life. I mean, if you're tight on your budget, then maybe a fixed is right for you.
Yep.
And 2 years, 3 years seems to be a very popular product for people. People tend to really go over the 2 to 3 years.
Yep.
One final thing I will say is what I say to our clients and people that I talk to in general. If you're on a variable rate at the moment, rule is it's below 3%. Your fixed rates, your 2-year fixed rates, your 3-year fixed rates is roughly about your 4%. Yep. So if we continue to have rate rises, which is likely that we're going to, and if it's a 0.15 or a 0.25, you're probably another 4 or 5 rate rises until you get to that 4%.
Yeah.
Does that make sense?
It does, yeah.
So, and then look, I'm reading a lot of stuff because I love to read in the mornings where, a lot of economists are predicting, 30% of economists were predicting that, we'll go through a few more rate rises, but it won't go any more than that. But who knows, mate?
Well, mate, they thought the property market would go 30% the other way.
That's true.
We went 30% north, So, hey, just on that, when it comes to budgeting, I think you've made a really great point, a great tip for people to bring it back to basics and look at their income versus outcome and things, of the such. Do you do a lot of work in that space? Like, for example, do you have a lot of clients who come to you who want to borrow a certain amount, but you've got to really sit them down and say, before we get to that point, you've got to sort this out and address your spending?
Yeah, you do. The conversation that myself and a lot of the brokers would have is around the budget. A lot of people will be like, well, what's your monthly budget?
Yeah.
A lot of people will look at you and they'll go straight through you. So that's the conversation that you have first, because it's like a house. It's like a foundation. If you haven't got a strong foundation, then the whole thing will crumble.
Yep.
Everything is about the budget. The Barefoot Investor says it really well as well. He's obviously a good advocate for the budget. But you really need that. So, yes, we have that conversation 99% of the time because it's a bank requirement, but also at the same time, it's a good opportunity to see people's behaviour because everything is down to behaviour.
Yep.
It's good to see where they're spending their money, but also at the same time, it's about giving someone the realistic opportunities and dreams from where they're spending their money and what they can and can't do. So, it's about budget 100%.
Yeah. What are some of the things, mate, that
people spend their money?
People spend their money.
Really.
There's a lot of different subscription models
Tab.
These days. Tab, yeah.
A lot of men. Tab would be a lot.
Yep. Subscription TV
Netflix,
and stuff like that. Yeah.
Stan.
Yep.
Foxtel, gas, electricity,
Coffees.
utilities. Oh, coffees. Oh my God.
Yeah.
They're huge.
Yeah.
it's really interesting from an age demographic. People that have read The Barefoot Investor have multiple accounts. Whereas if you've got the age demographic who are between my age, I'm 45, between 35, 45, I find, this is just my take on it, we kind of keep things a little bit more simplistic. 1 or 2 accounts. The younger crew, they obviously like to have multiple accounts because, that's what they're being told, which is fine. But I find it can be a little bit less easier to police where you're spending your money. So to find out where you're spending your money is my advice would be keep it simple. But to answer your question, males would be your tab. Your sporting, it's huge. Alcohol, look, everyone drinks. But alcohol would be another big thing. Holidays, obviously not because obviously what's happened the last couple of years, but that will open up a lot more. And iconic. A lot of people are buying.
Online shopping, retail.
Especially
of course,
different, we like to look good because it makes you feel good. You get that endorphin. So mate, that's probably outside the bills, the boring stuff. But that's really about it. And Uber Eats.
Of course, food, food and
Huge.
drink.
I could say that personally as well for my wife.
I just ordered an Uber Eats before.
Because it's easy, right?
It's easy, but I sent it to my partner at work. She got to cook something at the moment, so I organised a couple of juices for her, mate. It's quite, just quite smooth to me.
What a bun.
The question I was going to ask, mate, if you could break down, let's say the cash rate right now is 0.35.
0.35,
people that got mortgages at the moment, let's just base it off $1 million mortgage. Right, they might be sitting at home, they hear and see all the media, and they're thinking their repayment's going to be blown out of the water every month. Bring it back to giving us a broad range. And I know you don't have your stuff in front of you, we just can't pick a number out of your head, but what does that mean if there's 3 more rate rises on $1 million mortgage?
Well, range would be about $600 to $800 per month. However, if you go back to what we were talking about before with fixed rates and variable rates, if I went straight to a fixed rate at the moment, I'm jumping from say 2.5 to say 4%. That's huge. That's 1.5%. Then something else needs to be factored in where I need to let go in terms of my spending. So you could be looking at say between $600 to $800. Again, it comes back to your budget. Identifying where you're spending your money. And really speak to one of the specialists, like your financial planner, your mortgage broker. I'd really encourage people to speak to mortgage brokers.
Definitely.
Not because not bashing banks, but mortgage brokers have to take more qualifications than someone in the bank. And our requirements and our compliance is a lot stricter than what people are in the bank. So we will go through people's budgets. But to answer your question, mate, you're looking at least on $1 million. It could actually be between $600 and maybe $900 if it went from 2.5 to 4%. So it's really important that people analyse that and engage their brokers to find out. Hold on, should I go to a fixed rate? Should I stay on a variable rate?
So when you sit down with a new client, you're going through the application process. What are you assessing them? At what rate are you assessing them to be able to get an approval upon? It wouldn't be the current 0.35.
No, you don't.
You increase it, don't you? I think a lot of people don't understand that. I think when you sit down with a broker, you guys are doing risk management. So you're assessing their application on a higher cash rate, aren't you?
Well, you are. 0.35 is the cash rate at the moment. And then you've got, say, it depends on the level of deposit they've got, Jake. It can, like the rule of thumb is that you inflate that to say between 5 to 6% on an assessment. It's crazy, eh? So if the cash rate's 0.35, the bank are charging 2.5 to 2.8 or 3%, but I assess them on a 5 or 6% on the calculator. So, people will go, well, I earn 150 grand a year, 100 grand a year. And it's literally you inflate it. The reason why it's inflated is obviously for rate rises, but also at the same time, if we did it on 2.3% and the client's really tight in terms of servicing, and we have another rate rise, well, the bank hasn't done their right thing by the client because then there'll be foreclosures.
And that's where
everywhere.
that's where they got a lot of shit, isn't it, banks? Is that right?
What do you mean to find shit?
Just in terms of their due diligence, maybe on applications, they've caught themselves out a little bit.
Well, probably it was more, not probably from the bank's perspective, it was probably more the calibre of qualifications for brokers. That's changed a lot, but also for banks as well. So, but look, the Royal Commission obviously changed the whole landscape. It
Yep.
changed everything.
Yeah.
For a
the
good,
better.
For 100%.
Yeah.
I think so, because we got rid of the Cowboys, which
Yep.
is good.
Yep.
But yeah.
What is a bank looking for?
Well, look, good question.
So
That's a
applications
good
in front
question.
of them. You know,
Look,
they want money in the bank.
category would be this. Number one, obviously, you look at the whole holistic picture. It would be first thing. That holistic picture looks like this, where you look at, say, the level of their income.
Mm-hmm.
You look at the level of the deposit. It doesn't just stop there. It obviously then you look at, say, how did they save, where they spending their money, how long have they been in their job, what have they got for an asset position. So
Security.
give you a prime example. Spoke to a young lady yesterday. Her mum and dad were prepared to go guarantor.
Mm-hmm.
Now, for guarantors, they're great for people that are looking to enter into the market, first home buyers. It's fantastic.
Yep.
So you're leveraging off
my
mum
parents
and
did
dad's.
that for me on a property.
Okay.
Yeah.
So perfect, right?
Yep.
So her and her partner had a good income, but no money saved, right? And they had a $43,000 personal loan, no money saved.
Yeah, right.
They were renting. Now, mum and dad owned a property, was pretty much outright. Mum and dad were 55, and they had like a $100,000 mortgage on property worth 800. Prime, perfect situation. Mum and dad were still young, which is 55, but is looking at their income, they're on a combined income. The applicants of 150 together, no income, no kids, nothing else. In terms of liabilities and that one thing, but they didn't have their money. So where are they spending their money? So to answer your question, it's done a holistic. It's not just done factually going, yep, that ticks all the boxes.
Yep.
So in that instance there, my recommendation to her was you need to show the bank that you can save, even if it's just 10 or 20 or 30 grand.
Yep.
Just show the bank that you can actually do something. Then
Come back.
come back.
Yeah.
So when you look at someone, it's literally those are your key things. Number one, I'd find out the deposits, just to recap. Income would be the first questions that I really ask, and then everything else goes into it. It's a lot of process. It can be up to around about 8 to 9 hours from start to finish with the client.
Yep. There's been an announcement made by, again, the Liberal Party that they're going to be...
This one.
Yeah. See, people
It's a
that are
good
listening,
question,
people listening, the way we like to conduct our podcast is we don't want to plan these things too much, mate. So we're going to put you on the spot.
Yeah.
So ScoMo's come out and said that he's going to allow first home buyers to dip into their super.
Yep.
Up to 50 grand.
Yep.
From my understanding is that once the property's then sold at a later date, that money goes back into your super.
Correct.
But it's to generate that cash input into buying your first home. Only 24 hours old, but what are your thoughts on that?
Look, I think it's a great incentive for first home buyers. I think what they've got to be really mindful of is a couple of things. Number one other thing is if you do that as a first home buyer, after the age of 55, you can put up to $300,000 into your super from the sale, which is great.
Yeah.
Right? Now, I'm not a financial planner, but a lot of financial planners, there's a cap on every year you can put X amount into your super.
Yep.
So I'll get back to your question in a second, but for people that are 55 that go into this scheme, if it comes off, it's fantastic.
Yep.
55, you can put up to 300,000. At the moment, I think it's either 60 or 65 that you can do that. So he'll lower that benchmark. For first home buyers, on a, let's just say it's a $600,000 property, well, you have 5% deposit. Once you save that, you still need to do that yourself as a first home buyer.
Yep.
You still need to save.
Yep.
You need on top of that your mortgage insurance and your stamp duty. So to buy a $600,000 property or a $700,000, you'd need at least 90 grand, 80 grand.
Yeah.
Okay, you've only got the 5% deposit. So then you dip into your super, which is great. Then you sell the property and then you've got to put that back. Well, it's fantastic. It gets you in a property. We just have to hope that there's more houses that happen because we don't have we have a shortage, right? Which I believe is not happening until July next year that this will come out.
Yep.
I was speaking to a mate this morning about this. One thing I don't think a lot of people have thought about. So talk about investors. You mentioned it before about people that have 4 or 5 investment properties. That's what people strive for. I think it's only either 10 or 11% of the population in Australia have investment properties.
Yeah, right.
Now, you think that that's quite large. It's not. And people think that it's difficult, but it's not. because either they don't know or, there's so many variances out there. So let's just talk about people that go down this path. If you borrow money for a $600,000 property, you would need at least, say, 70 or 80 grand to be rough figures, but you've only saved 3. You then sell the property in 3 or 4 years' time, you then have to pay that back.
Yep.
So you'd either going to sell it to upgrade, because that's generally what happens, or you go back to do some renovations to borrow more money.
Yep.
Where people have really got to be mindful is that when they do go this, the first-home buyers, 5 years' time, if they want to then look at buying an investment property, they just to be, I don't know the rules on this yet, but my question is that part of that super that they've borrowed, can they utilise the equity in the property, or will the bank, or will the bank turn around and go, no, we have to keep 50 grand equity aside to put it back in to your super. Now, that will stop people from buying again.
Investing,
Correct. Yeah. So the 12% or 10% investment properties people that we have now, that could diminish. Because it's going to pigeonhole people, if that makes sense. So that's the 4 or 5. That's the question that I would probably really encourage people that are watching this. Those are the questions you've got to ask. It's not just now. Think about 5 years' time.
Because it can be caught. I think we can get caught up in this media-driven world we're in, where it's very now, isn't it?
Oh yeah.
Especially when it comes to investing and that, we're all short-sighted more so than ever. I'm 34. I'm probably a bit more across it because of my experiences and being in the industry, what it means. You're in it for a long term. But I speak to a lot of people, mate, who want to get into property for flipping, turnarounds, quick cash, development here, development there, and we've spoken about this as well. And we only spoke about this last week, and I think we come to the conclusion that I'm better personally doing it for the long term, buying a house, a renovator, sitting on it, adding to it, then borrowing and going again, X, Y, and Z. But a lot of people that do it, isn't there, across the board?
Yeah, they all see what other people are doing, and they don't really get into it. I mean, look, let's just say you and I decided to buy a property together. We bought that property, 500 grand. Well, we've got to put our 5% deposit down. If it's an owner-occupied and we live in it, we don't have to pay stamp duty. You live in it for 12 months. If you didn't decide to rent it, if you didn't decide to have it as an owner-occupied and we bought it as a flipper, well, we need to put $25,000 as our 5%, plus our stamp duty, plus our costs. So we're looking at about 70 grand. We owe that property owes us $70,000
back.
Back. Then you need the money to then renovate the kitchen, the bathroom, the deck, all that kind of stuff. Polish the floors. There's another 100 there. Well, in the market that we're in now, so we went through a 30% increase in some areas. They're now talking that we're going to go back between 5 to 7. So it's all about timing, right? Now, if you and I did that now, in a market where it's going to go back, we're going to get that 170 back.
Yeah, not quickly.
No. Plus, we then need to sell. We then have a real estate agent that needs to sell it, or someone like yourself. So to do that, so you'd want to be in a position, if that's the case, to have the flexibility. That's all what I say to people. It's like if you and me did it, I'd be like, Jake, if we don't sell it, can we rent it out? And are we okay to do that for the next 3 or 4 years? Then other factors come into it, right?
For sure.
Marriage, kids, all that kind of stuff. So, and then you and I may be forced to sell it. Anyway, we're really getting into it now. So it's all about timing.
It is. No, you're exactly right. I think being in the property space as we are every day, the market up here, it's slow, there's no doubt. Even inquiries through inspections, and I speak to real estate agents more so than I've ever spoken to them the last 2 months than I have the last probably 12 months. Anyone up here, mate, in Queensland could have sold a property, before the last couple of months, but 12 months.
Mate, look, I'll tell you where you'll flourish more than real estate agents, in my honest opinion. A good buyer's agent will flourish more so because the perception, I'm not saying all real estate agents are like this, but the perception out there of real estate agents tend to not be the best. Communication, it's been a real busy time for them. So the people that can't buy now, couldn't buy then, they've just kind of disregarded. And things will become quiet, whereas you guys will be more relationship-based. You're the conduit. So that's where you guys will flourish, I firmly believe. Whereas real estate agent, it's kind of like that churn and burn kind of effect. And when things do go back, because they will come back a bit, they've started to. Well, the real estate agents that, forgot about the people.
They'll start
Well,
coming, yeah.
correct.
And it's
Then
happened.
they'll start,
I get probably 3 or 4 a day
There you go.
of agents off
Yep.
markets. What do we got?
Yep.
What buyers have you got? Let us know your buyers. We'll go find the properties for you. So there's a lot more of that happening now than has ever happened before.
But I think people will pay for it.
Yeah.
You know, the clients that we've obviously sent your way, which love.
Yep.
People will pay for the service.
Correct.
They really will. And I think people are put off at the moment, have done for the last 12 months, because we've done pre-approvals for people. Or we've, and they like, mate, I just cannot find it.
Yeah.
And that demoralises them. They
Yeah.
go, they just can't be bothered anymore. They've missed opportunities.
Buyer's fatigue.
Mate, well, there you go.
Yeah.
So, whereas giving them to yourself, mate, they just love that because they're finding value in it.
Yeah, certainly. Yeah, and all our clients are very different. We've got local clients, interstate clients, international clients. It all varies, mate. But yeah, look, it's certainly been interesting times the last 12 months, and I thought it was a great opportunity to get you on this podcast. Very relevant right now with the interest rates and mortgages and where we're going. Just finally, mate, before we say goodbye, have you got any final bits of advice for anyone buying property, maybe at different stages?
Yeah,
first home buyer.
First, look, would be get informed. Don't just do the Google search, if that makes sense. Find out people that have dealt with a mortgage broker, that they trust, that they've got the service, because you want that equivalent. You want to be felt that you're valued at the same time. So when dealing with the clients, even though that we've got multiple clients going on, they just want to know that they're important.
Yeah.
So think about the future.
Yep.
Think about the holistic approach. Make money work for you. It's very simple. Money's like a train. You need to move it. You can't just let it sit. But at the same time, it's that fundamentally work on your budget, pay your mortgage off, get equity as quickly as you possibly can, but also look at speaking to stockbrokers. You don't need to have a lot of money. Speak to stockbrokers. Find out more about the market. Speak to financial planners. It depends on your age demographic. About contributing more towards your super. Get informed. Spend one day out of 365 and sit with all professionals. Tell them what you're after, and then take that information away and take it on board and action it. Because what I do find is that a lot of people get so consumed in areas. Then areas of social media, then they're worrying about what other people are doing. I can tell you right now, the people that are doing well, and if you define success. Now, your success is different to my success. My values are different to your values. Find out what your values are and just stick in your own lane. Don't worry about anyone else. Don't worry about anyone else. You just worry about you.
Mate, just a final quick question before we let you go. Most of our clientele that 35, 50-year-old married couple, a couple of children, young is probably primary school. They're cashed up. They're moving up from interstate. See the value in property up here because they want to upgrade, but they're significantly got money to pay towards the purchase of the property, so their home loans might not be as big as what they once were. You work in that space a lot. Any advice for those young families?
Look, those guys have got it down pat. Like typically they know their budgets. They know what they want. They know the process. My bit of advice for those type of caliber of clients, and I deal with them quite considerably, is before you enter an agreement with a lender, find out all the lenders that are applicable. Now, if you've got a fair bit of deposit, I tend to tell people this: if you've got a good sized deposit, shop around, not just the top 5, top 6 banks. You want something with low rate, no ongoing, good access to the internet, something that's easy and quick. That's what you want. But you also want a good relationship with the broker that can guide you, like a traffic coordinator at an airport. It's like go right, go left. That's all they want, because they're not after the same level as someone like a first home buyer. They just want something quick.
Hand, for example.
They want it quick and they want it easy. So when dealing with them initially, they just want to know what documents you need, and then they want you to go find me your bank that's going to be the lowest rate, no ongoing, no monthly, and free redraw, mate. Well, that's outside your mainstream banks. Your Macquaries of the world, your INGs of the world. Good, great banks in terms of your, low fees. That's what they want. They just want that access to those kind of lenders. But don't get me wrong, big boys are pretty good. Like the big boys, in terms of the big banks, are very good. But they just want it quick, and they want it done, and they want it done quicker.
So we'll keep going here because you just brought up another question in my head. So there's a couple of clients we have right now we're on the hunt for who are probably even in another different positions of what I've just spoken about. one has 3 million to spend,
Mhm.
but they want us to find 2 different properties,
Mhm.
and one of them is got $2 million to spend,
Mhm.
and basically come to us and said, "You tell us where I should buy." Do you come across those clients at all that have a considerable amount of money
Yeah, we
and
do.
are looking to invest?
Yeah, we do. We've got we've got close relationships with accountancy firms that deal
Yep.
with a lot of developers and people
yeah.
that are
Yep.
well established.
Yep.
So yeah, no, we certainly do. Definitely. One thing I will say, the expectation levels of people with that size of a deposit,
Yeah.
they need to have a good relationship with the right specialist. That
Yep.
is critical
Yep.
because they want things done quick.
Yeah.
And they want to deal with someone that knows what's happening,
Yep.
and they just want to be clear in the process.
Yeah.
Like if you put yourself in their shoes, right? And kudos to them, they've made that money. They haven't made that money by mucking around.
Mm-hmm.
They've done it because they've either been calculated, they've paid down the mortgage, they've started somewhere.
Yep.
So by the time they get to that level, if they've made it, then obviously they want it to be done the same manner that they built it in. Does
Yep.
that make sense?
Yep. Yep.
So they want it done quickly. They want it
Yep.
done professionally.
Yep.
And typically, they don't really hit me with, like if I said to them, okay, well, it's a CBA or an ANZ or a Macquarie.
No.
I'll be honest with you.
Yeah.
Interest rate is important to them. Don't get me wrong. However, if we're talking of 2.25 in comparison to 2.45, some of them don't care.
Yeah.
They just want you to
done.
get it done
Yeah.
and make it happen ASAP.
Again, international.
Yeah.
Do you deal with
No.
have that much of an international space?
Banks have
No.
really changed that stuff. If it's an Aussie working abroad, do you
Yeah.
mean?
Correct. Yeah.
Yeah.
So we've got a couple of clients now. One of them Aussie residents.
Yeah.
They're moving back, so we're buying 2 investments for them, but they will live in them.
Will they
some
work
point.
here?
Yes.
Coming back in the same industry?
Same
with a different
company.
industry?
Same company, but
Okay.
moving back home.
Oh, that's fine then.
Yeah.
Yeah, that's fine.
But one of the partners won't be working, but he will be. Yeah.
Yeah, that's fine. If one of the partners, if he's working and they've got the deposit and he's moving back here, no issue. They
Yep.
paid an Australian dollar, an Australian bank account.
Yeah, that's a question I need to ask.
do?
Yeah.
Yeah.
Yeah. When they
Typically-
come back.
Yeah. Well,
Yeah,
typically,
yeah,
if you
yeah.
you know, obviously, it's just questionable in terms of where they earn their money in certain countries
tax
around
rate.
the world. Yeah.
Yeah.
I didn't want to say it, but yeah, look, mate, I would ask if they paid an Australian dollar, where's it paid to?
Yeah.
Are they paying tax on it? That's all banks want to know, mate.
Yeah.
Are you paying tax? Where's the money so we can control it? And if it's not anti-money laundering,
Yeah.
you know,
That's
over
the question.
yeah, that's pretty much it is actually. Where's the cash?
Yeah, that's it. All right, mate. Hey, thanks again.
Thanks, champion.
All right, good on you.
Thanks, mate. Thank you very much for
Give
having
another
me.
shout out to SW Brokerage if you guys are located anywhere in Australia. You service all
We do,
clients.
mate. We do.
Yep.
We do a lot online because that's the thing now. We've got
Yep.
some fantastic systems.
Jump on the website.
Jump on the website, swbrokerage.com.au, and mate, we do more than just home loans. We do commercial, we do business, we do cars, we do
Everything.
boats. Yeah, but predominantly residential and commercial is our bread and butter.
Great. Good stuff, mate.
Thanks,
Good man.
champion.